let's continue the discussion with Anna Rathbun. Anna is the founder and CEO of Grenadilla Advisory. Anna, your main takeaway from today's report?
It wasn't a good report. And last month, it was a great report, but it's not usual to have something where we have 126 or 136,000 jobs down to negative 92,000. I mean, that is not usual. And this is not an example of jobs market going up and down. It is difficult to know which one is the trend, right? The positive one or the negative one. If we're looking at the 6-month to a 1-year trend, I'm inclined to look at this month's number as part of the trend and last month's number as an anomaly. But overall, it wasn't a good number. And the unemployment rate going up to 4.4% from 4.3% also signals a negative trend as well.
How much weight should we put on this single month as a signal?
It's not just 1 month, right? So skip last month. And then if we go back to, the last 6 months to a year, we've been on a trend where the unemployment rate has been going up. The jobs market has been softening, if at all, like it's basically frozen, low hire, low fire type of an environment. So I would look at this month as sort of a continuation of what we've seen, not as an anomaly that is sitting by itself.
So, a live look at the White House, by the way, 8:20 in the nation's capital. This report, I was going through it. It included revisions that change the recent trajectory. December was revised down by 65,000 from plus 48,000 all the way down to minus 17,000. January was revised from plus 130,000 to plus 126,000. And with those updates, all things considered, the December plus January total is 69,000 lower than we thought a month ago. When you string the last 3 months together, Anna, how different does the trend look to you?
Oh, the trend is exactly as I expected. So again, this month's jobs report is more like the trend in the last month, right? So the trend is that the jobs market is slowing down. Another thing that we look at is cyclical versus non-cyclical. So one of the trends that we've seen in the last year or two or three has been that healthcare and social worker section of the economy has been gaining a lot of jobs, and a lot of jobs that are more on the cyclical side, that is more indicative of whether or not the economy is growing or contracting, like manufacturing, construction, leisure, and hospitality. They've been bifurcating. And this month, what we've seen is that the cyclical sectors have been losing jobs. It was net negative jobs gained or lost. So that tells me that underneath the seemingly robust numbers that we may have seen in the past, the cyclical parts of the economy are signaling some slowing down. And that is certainly not welcome, certainly with the war, but it has a bit to do with some of the uncertainties that we've seen with the tariffs implemented last year, and it looks like it's ongoing this year. Employers just don't know when to hire and when to fire because they can't make plans going forward.
Yeah, we're heading into the Fed's next meeting with a soft jobs report now. Wage growth still running near 4% year over year. As you mentioned, we're also dealing with higher oil prices amid the war in the Middle East. That can feed into inflation expectations as well. All of that considered, how will these factors feed into how the Fed maneuvers next?
I think the Fed will wait. They had a few times of cutting last year, and it's okay to wait. And I think they will wait. The thing about the inflation is there's a lot of scare around oil prices. Remember, it's only been 5 days of trading on oil. This doesn't mean that it's a prolonged shortage or a prolonged crisis. I've seen headlines talking about crisis. We're not there at this time. So we're going to see some tick up in gasoline prices at the pump. We may see some tick up in, United Airlines and American Airlines. They're not doing well because jet fuels are going up, right? And that's a huge part of their expenditure. So they're pockets where we're going to see some increases, but to think that oil prices going up for 5 days is going to cause inflation is a little bit premature. Now, if the war is sustained for weeks on end, we could feel some pain. I don't think the Fed will decide interest rate policy based on oil prices, but if it is sustained for a long time, they can't ignore it.
Thanks, Anna. Have a good weekend.